Ladies and gentlemen, welcome to the sixth EBI policy series. My name is Thomas Gstädtner and I chair the supervisory board of the EBI. We have a lot of participants again today. Some are still popping in to this call, but today's session is about the digital finance package of the EU Commission. And to help us getting to know this package a bit better, I would like to welcome Mr. Marcel Haag, Director, Horizontal Policies at DG FISMA. And I will also introduce Marcel in a little bit later on. As co-discussants, I very much welcome Dr. Michael Diederich, CEO of HVB and member of the Executive Committee of UniCredit Group, and Professor Filippo Annunziata from the EBI Academic Board and the University of Bocconi. Very much welcome to both of you as well. The European Commission adopted on the 24th of September 2020 a digital finance package. This package included a digital finance strategy and legislative proposals on crypto assets, retail payment strategy, and digital resilience. The aim of this package is to help creating a competitive EU financial sector that gives consumers access to innovative financial products. It shall also ensure consumer protection and financial stability. In the Commission's view, digital finance services can help modernize the European economy and turn Europe into a global digital player. When it comes to digitalization, let me briefly mention 2 or 3 thoughts. In the last 5 to 10 years, digitalization of financial services has become one of the mega trends in banking and finance, probably like in other parts of our society. Be it front-end services or middle or back office work, banks are looking into different means on how to use technology in their day-to-day work. This trend is driven by customer demand in many cases, but from a bank perspective, cost reduction certainly also plays an important role. This development was further pushed by the COVID-19 crisis, which forced banks to think about new ways to digitalize their services simply due to the fact that traditional bank branches needed to reduce their opening hours and banks needed to look for different ways to interact with their clients. On the other side, the general trend to digitalization in our society also enabled non-banks more and more to enter into the sphere of that traditionally was occupied by banks. Non-banks offered payment services or even launched their own private cryptocurrency, a crypto asset linked to the value of major fiat currencies. This in turn drove central banks to think about and plan launching their own digital currency. If introduced, this would enable customers to hold direct accounts with a central bank without the intermediation of a bank. Hearing about these developments, one can certainly ask, what is the future of banking if we can do our services via big tech companies like Apple, and if we hold accounts directly with central banks? Against this backdrop, the Commission proposed its digital finance package. This package is dealing with many different aspects of our new digital finance world. Looking at the bigger picture, the DFP aims to accelerate cross-border operations and help to support financial market integration in the banking and capital markets union. And a closer banking and capital markets union will further strengthen Europe's economic and monetary union. This is the view of most policymakers, practitioners, and academics alike, and was also very often discussed here at the EBI. So let's see how this can be done and what the effects of the DFP on banks, customers, and the bigger society will be. Let me now introduce our speakers for today. First of all, our keynote speaker, Mr. Marcel Haag from DG FISMA. Mr. Haag studied law at the University of Freiburg, Bonn, and Strasbourg, and at the EUE in Florence, and is qualified as a judge in Düsseldorf. After a short stint in the private sector, Mr. Haag joined the European Commission and worked in different Commission services. Until summer 2020, Mr. Haag served as Director for Policy Coordination in the Secretariat General of the Commission. And he's now Director for Horizontal Policies at DG FISMA. Secondly, I would like to introduce also Mr. Diederich. Mr. Diederich studied business management at the University of Applied Sciences, and he has an MBA degree from the Kellogg Graduate School of Management in Chicago and a PhD in business and economics. On January 1st, 2018, he took over the role of CEO of HVB, HypoVereinsbank, and also became a member of the executive committee of UniCredit. Last but certainly not least, I would like to welcome Professor Filippo Annunziata, who holds a PhD in commercial law. And he's an associate professor of financial markets law and regulation at Bocconi University since 2007. He's a member of the European Banking Institute Academic Board and as well a member of the research group at the European Central Bank since 2017. With these words, I would like to close, and again, welcome to the series. I would like to hand over now to Mr. Haag, who will give his opening speech. And thanks very much for your attention.
Yeah, thank you, Thomas, for the kind introduction, and thank you for the invitation to the European Banking Institute. It's my pleasure to be here this morning. Good morning, ladies and gentlemen. In my short introductory considerations, I'd like to focus on two things. Firstly, on the opportunities and challenges that digital finance presents for the EU, as well as for new players and the incumbents. And secondly, I'd like to briefly update you on the state of play of the proposals on crypto assets and digital operational resilience and the digital finance strategy that the Commission has presented in last September. Now, on the first point, opportunities and challenges for digital finance. The progressive digitalization has generated a new landscape for the financial sector. Europe has become a digital finance powerhouse. In the meantime, fintech is the sector that has attracted the most venture capital investment in the EU in the past 5 years. Fintech startups such as N26, Adyen, and Klarna have developed into unicorns with global champion status. Traditional players are also embracing digitalization. Fintech has positive effects for both users and operators. Users have easier access to traditional and new services, while operators are better interconnected, capable of providing cheaper and more personalized services. The future of finance is clearly digital, there's no doubt. Consumers and businesses are more and more accessing financial services digitally. Innovative market participants are deploying new technologies, and existing business models are rapidly changing. Ensuring safe and reliable operation of digital infrastructures has also become more important as more people access financial services online and financial sector employees themselves work remotely. Digital finance has helped citizens and businesses tackle the unprecedented situation created by the COVID-19 pandemic. Europe must take full advantage of this in its recovery strategy to help repair the social and economic damage brought by the pandemic. Digital technologies will be key for relaunching and modernizing the European economy across sectors. It will move Europe forward as a global digital player. The quick technological developments coupled with innovative markets create a challenge for regulators and supervisors alike. Our digital finance strategy that the Commission presented in September 2020 aims at ensuring that the EU regulatory framework facilitates digital innovation in the interest of consumers and market efficiency, while at the same time addressing the new challenges and risks associated with the digital transformation. As part of our digital finance package, the Commission put forward two legislative proposals. The proposal on crypto assets, which will draw on the possibilities offered by crypto assets whilst mitigating risks for investors and financial stability. The second proposal on digital operational resilience for the financial sector aims at preventing and mitigating cyber threats. The proposals are currently with the co-legislators. We're making progress with the four priority areas identified in the digital finance strategy, and we're well proceeding with the negotiations on our DORA and MiCA proposals in the Council. I will Now come to my second point and briefly update you on the state of play of these two legislative proposals and the digital finance strategy more broadly. And I would like to stress in particular why they are important in the context of the EU financial regulatory framework. Now, first point on the MiCA proposal, the markets in crypto assets. For the first time, the MiCA proposal will establish a common European regulatory framework to provide legal clarity on crypto assets that currently fall outside the scope of EU financial services regulation, as well as on certain activities and services related to them. For crypto assets that are already covered by existing EU financial legislation, the Commission has proposed an amendment to MiFID II. This is to make clear that traditional financial instruments can also be issued in a tokenized form on a distributed ledger. Crypto assets can present many opportunities that can contribute to our policy objectives. For instance, some crypto assets, utility tokens, can contribute to our objective of building a capital markets union by allowing for cheaper, less burdensome, and more inclusive ways of financing for startups and SMEs. The crypto asset market as such is still modest in size and does not pose a threat to financial stability. We know that crypto assets also present consumer protection and market integrity related issues, including the risk of market manipulation. However, a subset of crypto assets, the so-called stable coins, could trigger challenges to financial stability, monetary policy transmission, or monetary sovereignty. These issues have been taken into account when the Commission has prepared its proposal. Transparency is a key pillar of our proposal, as it underlines the development of the sound EU crypto asset market and reinforces consumer protection. That is why we propose to regulate the issuance of crypto assets by requiring the publication of an information document, crypto asset white paper, for the offers of such crypto assets in the EU. Well-informed investors and consumers are the first line of defense against fraud. The proposed regulation will contain specific provisions for asset reference tokens and e-money tokens. It will also set out requirements for a wide range of crypto asset service providers, such as custodian wallet providers, crypto asset exchanges, and crypto asset trading platforms. Crypto assets issuers and service providers will benefit from a passport which will enable them to scale up their activities across the single market. Market fragmentation due to divergent national bespoke regimes will be reduced. We have also proposed a pilot regime to facilitate the development of financial market infrastructures using distributed ledger technology. This will help policymakers to identify the regulatory barriers embedded in our legislation. One of the guiding pillars of the Commission's digital finance strategy is to ensure that EU legislation is innovation friendly. We believe that our proposals on crypto assets are comprehensive and clearly meet these objectives by regulating innovation in and not out. Now, let me come briefly to the proposal to enhance the digital resilience in the financial sector, our DORA proposal. Cyber threats are inherent in finance. That's a reality that we see every day. The growing reliance on digital processes calls for increasing cybersecurity across financial sectors. This was demonstrated by the operational challenges resulted from COVID-19 and its implications for the financial sector. The security of ICT systems and tools is an integral part of the operational resilience of our financial institutions and therefore deserve our full attention. While we've taken significant steps to strengthening the financial resilience of companies, we must not lose sight of the operational stability and resilience angle. The financial entities need to be able to withstand ICT-related attacks or outages. Cyber risk is not consistently addressed throughout the EU financial services framework. To increase the level of digital resilience of financial market participants, we put forward our DORA proposal in September 2020. Through DORA, we intend to harmonize further the ICT risk management requirements for all regulated financial entities while ensuring proportionality for the various sectors. Fragmentation and lack of alignment across financial subsectors are likely to undermine the strength of the operational resilience and ultimately the single market perspective. We've also made progress on the digital finance strategy, which has also been part of our digital finance package of last September. As part of our strategy, we are looking into how big technology companies and large platforms are entering financial services. We need to make sure that the benefits they can bring for consumers and businesses do not come with harmful practices and increased prudential risks. In general, the forthcoming Digital Market Act aims to ensure fair competition in the digital world by tackling the imbalances between significant platforms acting as gatekeepers and other players in the European Union. We're also examining how our financial regulation and supervision must adjust in order to ensure that all risks are properly covered along the same activity, same risks, same rules principle. Technology companies need to face the same prudential rules and supervision as traditional banks, insurance, or investment companies when they start providing financial services. Their ability for quick customer acquisition may also pose increased risks, for instance, systemic risks, procyclicality risks in the area of credit and conduct, which will also have to be examined and, if needed, be addressed. Let me conclude. The Commission's vision for the financial services sector is ambitious in a time of great change. We want an enabling framework that is future-proof, that manages risks, that is innovation-friendly, and puts the consumer at the heart of a new digital economy. A concerted effort between the private and public sector will be more important than ever to achieve these objectives, and we're looking forward to continuing our fruitful cooperation with the co-legislators and civil society. Thank you for your attention.
Thank you very much, Marcel. We will have the Q&A session later, but thanks very much for this opening remark. And then I would introduce now to this discussion our co-discussants, and I would like to start with Dr. Michael Diederich. You see him here, and this is just for your background as Michael Zumski, but this is one of the people in his IT department. So Michael Diederich essentially would like to ask you for your statement on this package, and thanks very much for participating in this conference.
No, many thanks, Thomas, and many thanks and welcome. And it's great to have the opportunity to be in this forum and to have the discussion with you on this very important subject. Let me briefly split my remarks into three pillars. First, I want to make a general remark with respect to digitalization, as Thomas already indicated. Then I will make a short comment about the general framework, which Thomas has just described. And maybe thirdly, but not lastly, I want to make a remark where we may see, coming from the practical point of view, room for further improvement of the overall package. As described earlier, it was already before COVID, but digitalization is a very important component of running, steering, and managing a bank. With COVID, things have even accelerated, and we have also seen a tremendous change in client behavior during this moment, and that's why For us, it is of utmost importance to have a reliable framework we can work with. Maybe a general remark to the digital finance package. With the publication in September, the EU Commission set a very important milestones for us as the financial service industry and for us as banks. We welcome the European Commission initiative to create and implement a new digital framework for Europe. It rightly so, one relies on strong European market participants when it comes to digital service industry. Therefore, and allow me to make this remark, the commitment for the principle of same business, same risk, same rules is expressly welcomed from our end. For us, it is important to have a level playing field with the big global tech companies and fintech, given that these are our real competitors going forward. Therefore, as an example, data should be shared across all sectors with the consent of the consumers to make sure that we can share their data with whom and whomever they want. If the Open Finance initiative is limited only to banks, it would put us in a very difficult situation vis-à-vis all the tech companies. But, and we think a first step to minimize these distractions is done, and to create a level playing field is going in the right direction. Where would we see potential further room for improvement? And let me pick here two specific topics, which is DORA and which is MiCA. DORA should ensure consistency and harmonization with the already existing EU regulations, ideally even streamlining and simplifying already existing requirements. As an example, the termination of a third-party contract by the authority should not be a standard tool of enforcement and might bring us into difficulties. The use of critical service providers from third countries should not be generally prohibited. When it comes to MiCA, I fully agree on that what Thomas said. It gives great opportunity, especially the distributed ledger technology for the financial service sector. We use technology, especially when it comes to our trade finance initiative. For example, we work together here with WeTrade in executing trade finance transactions. As you have seen, the asset class, crypto assets, is developing very dynamically. And MiCA, the proposal for the regulation on the market for crypto asset, is a very important step to regulate this specific asset class. We, as UniCredit, as a pan-European bank, when it comes to Bitcoins, we are a bit skeptical when it comes to that. We are in the strong belief that a currency belongs into the hand of the central banks and not to individual and private companies. That's why we do not actively invest nor advise on cryptocurrencies as a bank. What we do support is the plan to introduce the digital euro. When it comes to the speed of implementation, we see currently that, especially in Germany, a very rapid development when it comes to the framework, and against the backdrop and the background of the rapid implementation at national level, it would certainly be good to introduce the comprehensive regulatory framework for crypto assets at all EU level rather soon, to have a common ground and a framework on that. On that, I want to stop, and I'm happy to take your questions.
Thank you very much, Michael, for your statement. Before we go to the Q&A session, let me now introduce Filippo and Annunziata to this discussion. Filippo has published on this topic already, in particular on MiCA. So I'm very interested also to hear your views about the digital finance package of the Commission. Filippo, over to you.
Thank you, Thomas, and thank you everybody for this seminar and invitation. Yes, I perfectly share the position that the new digital finance package is a groundbreaking and very interesting piece of legislation. It's made up of 3 connected proposals, MiCAR, DORA, and DLT. And at the core of this legislation lies naturally MiCAR. And if the Union achieves the approval of MiCAR, we will have the first pan-global jurisdiction that tries to regulate this new phenomena, thus sort of standing at the forefront vis-a-vis other jurisdictions, such as the United States, where they still are following a case-by-case approach by trying to understand whether a crypto asset falls within the highway test of 1946 or not. So I think it is a great move forward by the European Union, and that we should really work on that. I see that there are some interesting points that have already been raised by the previous panelists on MiCAR. And most of these revolve around a very complicated issue, which is what I would call taxonomy. Taxonomy in MiCAR vis-a-vis existing financial legislation. And we know that MiCAR touches upon and regulates the market for crypto assets that do not already fall within the scope of existing EU financial legislation. On the one side, let's call it the capital markets package, including MiFID, prospectus, and market abuse. On the other side, payment services and e-money directive. And we know that MiCAR is trying to sort of carve out its own dimension by not in sort of impairing into the areas of capital markets legislation and payment services legislation as it is. And this is perfectly reasonable, but we still need to understand better how this regulation would actually fit into the current architecture of EU financial markets legislation. And the most striking probably example of what I'm trying to say is MiFID, because we know what MiFID is about. We know what financial instruments fall within the scope of MiFID, but we also know that there are still a lot of uncertainties as to how we should actually identify the definition of financial instruments within MiFID. For instance, concepts such as the negotiability of a financial instrument, which is an essential element of the MiFID definition, are approached differently among member states and among European supervisors. So depending, for instance, on how you frame the notion of negotiability, you may end up by having an asset which is within or without the scope of MiFID. And there are complicated topics which relate to the possible qualification of tokens as commodity derivatives that might in some way be captured by the MiFID package on the basis of its existing wording. I refer in particular to the opinion rendered by ESMA in January 2019, where they sort of tried to sort out the possible qualification of crypto assets in relation to MiFID, just to understand how complex and challenging the identification of an asset within the scope of MiFID might be. So I think that we have to work on that, and maybe to find a way to identify better on an ex-ante basis what would actually fall within the scope of MiFID MAR prospectus on the one side and MiCAR on the other. Another topic which has been brought up just in the last intervention is that of truly decentralized assets such as Bitcoin. It is a little bit unclear whether these would fall within the scope of the regulation. I think it is important that we address this issue right at the beginning without running the risk of having to chase phenomena, truly decentralized phenomena such as Bitcoin after MiCAR has been adopted. And naturally, well, we know that Bitcoin is the most important crypto asset in terms of capital capitalization that we have, and it is not really clear whether MiCAR would be able to capture truly decentralized crypto assets as Bitcoin is. But leaving apart these truly technical aspects that are more related to how we apply existing financial legislation rather to MiCAR itself, I think that the three package, MiCAR, DORA, and DLT, are truly interesting, and they could provide EU financial and capital markets legislation with a huge contribution to the development, not just of legislation, but also of the underlying market. And thank you very much. I naturally remain at your disposal for Q&As.
Thank you very much, Filippo, for your statement. We have now around about 130 participants in there, and I would like to open out a Q&A session. We have the Q&A tool here on the bottom, so if you want to ask a question, please feel free to write it into the Q&A tool, and if it fits into the discussion or if it brings up a new topic, I will certainly read it. But let me start first of all with one question to Marcel Haag. Essentially, now looking at this digital finance package, yeah, and we've both, I think, seen that the whole thing should be part of a bigger picture. So the European Union is trying to create a banking union, is trying to establish a capital markets union, all in order to make the monetary union more stable and to further the integration of capital markets in Europe. Yeah. So how do these, the goals of the digital finance strategy, how do these fit into the broader Commission policies? Can you elaborate on this a little bit more?
Yeah, happy to. Thank you, Thomas. With our digital finance strategy, we're broadly covering four major objectives. First of all, we want to make a contribution to the creation of a digital single market for financial services. That is what the Commission is called to do by the treaties. That is a traditional objective in a new and innovative area. And we believe that this will benefit consumers and businesses alike, because it would help the creation of cross-border services and allow for and facilitate cross-border transactions. And secondly, our objective is to make sure that as I said, we regulate innovation in the area of digital financial services in the interest of consumers and also in the interest of market efficiency. I think Filippo made this point already very clear. The Commission has taken a proactive approach here and wants to create a framework that market participants can make use of, and that makes sure that our digital financial services regulatory framework and supervision remain relevant in the digital age. Our third objective is to create a European financial data space to promote data-driven innovation, and here we're building on the broader European data strategy. And finally, our fourth objective is to address the challenges and risks that are associated with the digital transformation, and make sure that data protection concerns are being addressed, that prudential supervision is adequate, and that we increase the resilience of our financial system. all of this we're doing with an awareness of the international environment that we're working in. So we're working closely with international partners because we're aware that the benefits of digitalization can best be reaped when they can be deployed and used in a framework that is based on international standards and principles. With these objectives, we are contributing to the overall objectives of the European Union, not only in the area of financial services, but more broadly in terms of our policies regarding our digital agenda, but also our recovery strategy after the COVID-19 crisis, where we believe that digital financial services present a lot of opportunities for the fast recovery. We contribute to our objectives in the area of innovation and also to our green transformation of our economies. So I believe that the digital finance agenda that we have set out makes a significant contribution to the wider EU policy objectives from the specific angle of the financial services and markets angle.
Thank you very much, Marcel. Then if I turn to Michael Diederich. Michael, I mean, in your speech, but also I think in my opening remarks, I was essentially questioning a little bit now, what's the role left for banks if you have this whole digital environment? Obviously, that's a bit provocative, because I'm sure there are many other aspects where banks will have an important role in our society. But at the moment, we are essentially in a bank-driven economy in Europe. Yeah, capital markets play only a compared to the banking industry, a minor role in the financing of our economy. But if you now see this whole development with digital finance and digital assets, yeah, we see that big techs, at least thinking at the moment about entering into this space as well, that fintechs can access client data in order to effect payment services, etc. What is, if I may ask, what's left for the banks in such an environment? Do you see this as a threat to the banks, and if so, in which aspects?
No, thank you. We see that more as an opportunity, given that out of this change in the market, a lot of new business opportunities will arise. And even if the digitalization is moving ahead, and even if also the customer behavior is changing, a bank is a very important intermediary between people who want to get money and or who want to invest money and people who have money and are able to provide this capital. And in all of that, you need very educated, very well people who can help the client in finding the right asset classes and or the right financing mix. So with that, and with the creation of the new asset class, i.e. the digital assets, I think we see quite a lot of new opportunities coming up out of that asset, and the bank is able and capable in taking and transforming risk. So I do not see that as a threat. That it becomes an opportunity, for that it is important of that what the EU Commission is trying to do, i.e. to come up with a level playing field. But if we have that, we are quite sure, given that of what the strength of a bank is, i.e. being close to a client, in taking risk, in converting risk. And I think, Thomas, we have shown as a financial service industry overall, especially during COVID, that the banks were part of the solution, given that everyone, the corporates, the individuals, the investors, they were all looking for advice what to do in terms of financing and or in terms of assets management and in terms of asset management. So I see that clearly as a huge opportunity for the banks. Do we have to adapt to this? Yes, that's true. And that's why we are speeding up all the efforts to make sure that we rightly positioned. But in general, we see that as a huge opportunity.
Thank you very much. Now let me turn to Filippo. And as I said, you have been working intensively also on MiCA and doing a research in this area. And MiCA certainly stands out as the centerpiece of the new regulatory strategy. Yeah. So how do you expect the regulation to be effective in fostering the creation of an integrated EU market for crypto assets? Yeah. And then if I may add a small question, which was asked by the audience by Jochen Kindermann, which fits probably quite well to this question, is he says that MiCA is a huge step forward. But because of the importance of MiCA, wouldn't it be even necessary to speed up the implementation process of MiCA to speed up the timing for the implementation of this regulation? So maybe Filippo, to you, and maybe also Marcel, you want to comment on this topic.
Yes, sure. Thank you, Thomas. Well, as to the first question, I think that the turning point of MiCA is that it would provide a European passport for these crypto assets, and that's, you know, it's clear cut, and also MiCA is a regulation, so it's directly applicable, and for once we shouldn't have too many divergences among member states, and I think those are the two key elements of MiCA: European passport plus directly applicable regulation. There is a poison pill again, which goes back to taxonomy, because MiCA rightly does not restrict too much access to market. For instance, it does not require for utility tokens to be previously authorized or registered in a member state, which is the typical European passport mechanism. You get a license and then the European passport. But MiCA is very reasonable in understanding that this is a small market, and that if you put this filter in terms of accessing the market, this could create difficulties. But at the same time, since taxonomy needs to be clarified, you may end up with a situation whereby in a certain country, a crypto asset has been placed on the market under MiCA, and it's been considered as a non-financial, non-MiFID instrument. And then when that asset circulates in other countries, due to the difficulties in interpreting MiFID, market abuse, prospectus, what is a transferable security, locally, it could be under the risk of a possible requalification. And this could hinder the creation of an integrated market on the basis. That's why taxonomy is so important, because we have to ensure that what is considered as a MiCA token in one country is accepted as such in the host member state. And at that point, local courts, judges, local doctrine will have to sort of align with that position of the home member state. And I think this needs to be a little bit fixed in the MiCA context. And looking at the other question, yes, I think that the sooner the better. The sooner we have MiCA in place, the better we could overcome market fragmentation. And let me say once again, Europe would be the unique pan-global jurisdiction, 27 countries with a common regime for crypto assets, and this would be unique. So if we achieve that, it would give us effectively a competitive advantage vis-a-vis all other marketplaces and jurisdictions which are trying to sort of fill in the gap. So I'm a strong supporter of moving ahead quickly, fixing what we have to fix, but picking up this unique occasion of having a regulation with a European passport for the pan-European market of crypto assets.
So there was a strong pro in relation to this point. Marcel, do you have anything you want to comment on?
Happy to. I think Filippo said it well. We are for once ahead of the curve, and we would like to remain ahead of the curve. with our regulation. So if we should get this this framework in place and MiCA in place as quickly as possible. But that said, adopting legislation in a democratic process requires a lot of discussion, a lot of exchanges, and that takes time if it's being done in a complex European Union that we are. I think what is positive for the industry is that as the proposal becomes increasingly stable in the legislative discussions and process, this already gives a good degree of predictability of the lending zone that we will end up in. So yes, let's do this as quickly as possible, but let's also not forget that we want the process to be a democratic one.
Thank you very much, Marcel. If I may read now one question, because we heard now obviously you and Filippo very strongly in favor of this MiCA. One question from Monaco Fairbanks is, does MiCA, as it is proposed, successfully address regulatory fragmentation? What are the potential cons of a regulation for crypto assets, if there are, from your point of view, any? Yeah, I don't know, Marcel or Filippo. You wrote it, yeah.
I don't feel, to be the one who's best placed to answer this question. But indeed, passporting is the best way to overcoming fragmentation. I mean, Filippo still has pointed out that there are some risks to recreating fragmentation through different regulatory supervisory practices in the member states, national courts taking divergent decisions and so on and so forth. But then we have the EU institutions and the European Court of Justice that can help us to then recreate a more uniform, more harmonized regulatory framework.
Well, actually, you couldn't think of anything more than MiCA to address regulatory fragmentation, because rather than having a regulation directly applicable with an automatic European passport, I mean, the tools that we have under the treaty are there, and that's the most that we can do. So if we improve taxonomy and definition and coordination with existing legislation, I really think that the answer is yes, it can successfully address regulatory fragmentation. I would also add that we have level 3, we have guidances, we have ESMA, we have EBA, and we can set up, joint committees to provide guidances and common language for implementing this. We also need to address issues of coordination with existing corporate national law, because another topic that we have is, for instance, MiFID tells us that a negotiable share or something that is similar to a share is a financial instrument. Okay, but what is a share? And similar to a share is different. In 27 member states, you have national corporate laws that tell you that something is similar or close to a share or not. You have different corporate forms. You have the Aktiengesellschaft, the GmbH, the SRL, and you have to put everything together. And this is outside the scope of MiCA, but that's where you can have risks of regulatory fragmentation. So once again, I think that fine-tuning on interpretation and taxonomy is the key to achieving the success that MiCA is most likely to achieve.
Thanks very much, Filippo. Now, let me turn again to Michael Diederich on let's say, the bigger picture of digitalization and how important this actually is for your clients. I mean, we can also extend it to crypto assets, to central bank digital currencies. So when you look at your experience in HypoVereinsbank, what trends do you observe now in terms of client behavior, and particularly in the past year? Obviously, you mentioned that digitalization was massively pushed also due to the COVID-19 crisis. Yeah, in which segments of the client relations is digitalization most visible from your experience?
No, many thanks. We saw that across all the different client segments, Thomas, from the individual side, from the institutional side, and also from the small and medium-sized enterprises up to the big multinational companies. Coming from the peculiar situation, but coming also from the fact that most of them are getting more and more used to have a seamless interaction with someone offering products and services, i.e., if you deal with these big platforms, it is very convenient, very reliable, and with 1, 2, 3 clicks, you get whatever you want. This is what the clients and what we have perceived once also from big incumbents in the financial service industry. And on top of that, besides the fact that the clients wants to see and wants to perceive this convenient approach, they want to choose the way how they interact with us. So it might be that we interact with the client on a way what we are currently doing via a telepresence and or via the mobile app and or via the online banking or whatever the way is. For us and what for the client is important, that all these different channels he or she is using interact seamlessly with each other. And I think COVID has speeded up this development, which was already in place, very dramatically, so that we have to adapt all the different streams, channels, and we have to make sure that all these channels communicate quite seamlessly with each other, so that the client has the same convenient buying behavior as they have with other providers on the tech side, on the fintech side, and in similar instances.
Thank you very much. Marcel, one question after this point I would have to you is, we've seen that digitalization has been pushed quite a lot during the COVID-19 crisis, but if you look at the post-COVID recovery, how do you see digital finance can contribute to this? It's obviously also one element which is strongly pushed by the recovery fund, that there should be a transfer to a more digital economy. But how do you see this in more practice? What are, let's say, the well-functioning digital services that currently help to cope with the COVID crisis?
Hey, sorry, I had a problem unmuting myself for that. I'm back online.
Shall I repeat the question, or did you hear?
No, it's fine. It's fine. I got your question. I was just muted and couldn't change that. No, as you suggested in introducing the question, we have seen a massive leap forward in the digitalization of the financial sector and of financial services during the crisis. We have seen a decrease, for instance, of the use of cash across the board, including in the country that you're currently in, Thomas. So what can this, and that I think has already given a good idea of what we can expect from a further digitalization going forward. So what we could see as well-functioning digital services could be fast and secure digital payment services, including contactless services. We could see a massive increase in online banking services, but also in other digital financial services that could be carried out completely remotely. In that sense, I think we have already now a pretty good idea of how digital financial services could move forward in the future. But that said, we I think have also made a huge step in digitalizing financial institutions themselves, with a lot of work being done remotely by the employees of financial institutions.
Thank you very much. Then maybe Filippo, one point in relation to the payment services. Yeah, so this is obviously one aspect which is dealt with as part of this package as well, and that will be highly affected by these new rules. That's because they support also the creation of new payment tokens. Yeah, would this development foster further progress on the side of the current payment services directive as well, from your point of view?
Yes, I think so, Thomas, because this new technology is very new. And the Payment Services Directive, including the second one, which was in its turn a very innovative piece of European legislation, opening up payment systems and platforms, was still in an environment where we didn't really see the impact of DLT technologies, blockchain, and the impact of artificial intelligence as strong as it is now. So it would need to be sort of reconsidered in the light of the new technological evolutions. Now, the DORA regulations goes in that direction, and we also see that in MiCAR we have asset reference tokens and e-money tokens that sort of stand at the borderline of the payment services and e-money directives. But I think that that's the clearest part of MiCAR, actually, also in terms of taxonomy. ARTs and EMTs is the more straightforward part of MiCAR that you have now. But in the end, I think that we would need to go back to PSD2 and read it with new glasses, because we would then have a new market in place with new market infrastructures and new terminology also that might require a sort of recap in the PSD2 environment.
Thank you very much. We've talked now a lot about digital finance, but maybe because we have 3 minutes left, let me close with one question to Michael Diederich on, let's say, mega trends in banking besides the whole digital finance developments we're seeing. Can you share with us a few of your thoughts in relation to what we're going to see in the banking industry when it comes to these big trends?
Thank you. And I think Filippo has briefly touched on that. Besides the new asset class of tokens, we may see a much wider usage of artificial intelligence. So, i.e., what can we read out of a certain pattern? How we can implement and how we can make use of artificial intelligence to avoid fraud and or other kind of things the clients and or other parties want to do with that. So I think that is one component that one use that much more. I think that the rebuilding of the overall network and the service model of banks is something you see going forward. And you will see that most of the banks have to come up with a much more standardized approach in serving certain areas, given that the cost of serves and also the errors, if you have too many manual steps included in certain processes, is something you will see further down the road. And I think these are the big topics we currently see. And again, the client is getting more and more demanding, challenging, and really requesting us to come up with all kind of services in a way they are used from other service providers.
Thank you very much for your comment. And then, because we actually only have 1 minute left, and I would like to round it up. And thanks so much, Marcel, Michael, and Filippo, for helping us to get acquainted with this topic, which is obviously very technical, but very important in our society. these days. I'm sorry if you couldn't answer all of the questions because there have been many today. But I hope this talk was very interesting for you. We had a lot of participants today, more than 130 at the height, from all over Europe, of course, but also from the US and even from Brazil. So thanks very much for participating, and we see each other again at the next policy series dealing then with the Commission's NPL package. So thanks so much and have a good day. Bye-bye.